Welcome back to the Daily Journal. So let's look at the trade I took prior to FOMC for the New York AM session. Quite honestly, I didn't mean to take this trade. Well, when I say I didn't, what I mean is I didn't plan to take this trade, and the reason being is that I'd, just a force of habit around the New York Open time. I always tend to look at my phone if I'm not at the charts. Of course, I wasn't trading this session because going into FOMC, I'd already had a loss and a win on earlier that day for the 2 a.m. And I just went to go have a little look to see how things had played out, and it was actually just such a clean setup. So let's look at. Okay, so it's this over here. So the chart was still in the 5 minute from when I had traded the 2 a.m. reversal, this market maker model, where I took my profits here. It ended up playing out all the way down to the previous day low. So Tuesday's low had been taken out. We had all these relative highs above. So now I'm looking at this as a market maker bar model. And going into New York, we had chopped around for the AM session, made a relatively good lows, came down, and then after 10 a.m., it was at this point where I looked at my phone, and I just popped in the limit order for it to come down to this change state delivery. And yeah, I just targeted these highs. I put my stop loss down here. I did actually widen it because it hadn't played out going into FOMC, which was later down here. Anyway, what did I do here? Yeah, there we go. So what I used for my take profits, I didn't go all the way for this. I actually just used basically my stop loss from the 2 a.m. session. Oh, I think it was this high over here. Let's have a look. Yeah. So this is just the low-hanging fruit, right? All these relative highs didn't have to be perfect. And yeah, so let's just see how that played out. And just to explain the trade idea, right? Again, we've got previous day low had been taken out. The 9:30 open sell side liquidity had been taken out, which was an engineered low, right? So the fact that after the open we had chopped around, traded into a previous day low, got a change in standard delivery, confirms to me, right, with the small mini reversal that market makers have been accumulating long positions and now they're going to distribute long positions. So yeah, and we obviously chopped around until FOMC, and then bam, we had this little swooping those lows, and my stop loss was safe. I did actually just open it up a bit down to here before, just to absorb any volatility. This is an order block after all, so it's permissible that could wick down, but my original stop loss to remain safe, and just bam, straight to it. It did eventually play out in terms of taking out that buy side move. Sorry, that's buy side liquidity for the market maker bar model. And here's the thing, right? Is that I went for the low hanging fruit. I don't want to sit in the FOMC statements. That's where the real massive chop usually happens. But even so, I mean, you took that out, came back, left these relative highs, came back, tapped into this order block. In fact, went straight into this gap that we had created from the news events. And yeah, then traded. Sorry, actually, yes, we had traded into that order block, traded to those highs, got a reaction at that volume imbalance, and then I think price sold off. Oh no, continued higher. Look at that. Okay, stunning, beautiful. Yeah, so that's the trade. That was it. Yeah. So yeah, epic FOMC day. It was actually really clean. I mean, we're just sitting in a range here. You took out the previous day low, reversed down to previous day high, reversed down to previous day low, and then took out the London session. I mean, that was just ping pong between time-based liquidity. So absolutely stunning. Like and subscribe, guys. Also, I'll be coming out with my educational series on YouTube, taking everything from my model and the PDFs and putting into a YouTube series for you guys. So look out for that. Like and subscribe, turn on the notifications. See you guys in the next one. Cheers.